Robert Omotunde is an investment analyst, one of the guys who crunch the numbers for us here on the program on a daily basis. Robert, good morning to you.
Hi, good morning.
Thank you. Thank you very much. Talk to us about the GIT market. Are you surprised that within just about 3-4 days, a bit of a rally in the bond market, it looks like yesterday things started cooling off all over again?
Well, it's not surprising, as you rightly put it, but the events that are playing out right now point us to what investors think they should do at this critical moment when Nigerian investment space seems to be crowded by a lot of headwinds, macroeconomic and other factors. But what we are witnessing at the Treasury bills market is majorly indicative of investors trying to take position in what they believe can give them some form of impressive return. But of course, like because of the general negative sentiment in the market, we begin to see up, and down kind of momentum in the market, and that's why you see the Treasury bills market as well as other markets, experiencing some bullish moments, and then coming back with some form of respite because investors are not too absolutely sure, of their investment decision at this time because of so many uncertainties in the Nigerian investment space.
Let's key a little bit into the bonds part, but the bond markets, FGN bonds, investors concerned about the fiscal space, and what does this begin to tell us about the countdown to December? JP Morgan government bond index, or they call it GBI, threat of Nigeria's exclusion from that basket.
Okay, that has been the major concern for most investors who would normally take position, in the Nigerian fixed income space, particularly the bonds market. And of course, you would note that JP Morgan has given the ultimatum that by December, if the liquidity, the expected FX liquidity is not met, some Nigerian bonds that are already listed in JP Morgan Emerging Market Bond Index will be delisted. Of course, this is a major concern because these were the reasons that attracted most investors in 2013 into the fixed income space. The fact that the index is tracked globally, for emerging markets, and the fact that this will provide some form of attraction into the Nigerian market where we have very high yields. Now, of course, from the fiscal angle, the government is trying to put a lot of things in place. There's a lot of restructuring going on at the moment, while there are still concerns about the oil prices. The investors are still very somewhat confident in what the current administration, the reforms that the current administration is putting in place. But these factors may not be sufficient to encourage investors to take position significantly. I mean foreign investors now, significantly in the Nigerian bonds market because of the FX uncertainties. You would note that if you're checking the forward quotes for FX, 1 year quote is reading about 230 naira to a dollar at the interbank. That's more or less the official rate now. So it means that future expectation of exchange rate movement is not really favorable, and that's why most foreign investors are taking caution, in taking position. So, notwithstanding the efforts that are being put in place by the fiscal authority, the major concern will still be the effects of uncertainty, which should be the factor to attract most foreign investors into this market.
Robert, you hit the right chord there. It looks like when you see situations or things happening, movements, whatever, speculators in the gilt market, their key concern, the underlying, the story behind the cotton, so to speak, is the currency, and there are concerns that we should go for another round of devaluation. We're about 120 days to the end of the year. Do you think the state of the currency is the chief concern for investors who are looking at Nigeria's long-term assets, long to medium-term assets here, about how they should trade this, how they should buy more, putting the political risks into the basket to consider, you think, the level of the Naira or the state of the Naira is the chief concern?
Well, there are so many factors that affect investment in any bond, a sovereign bond like Nigeria. Exchange rate concern or exchange rate risk is just one of them. But other factors that we may want to talk about, interest rate risk, credit risk, political risk, if you want to mention, are not so much of a threat at the moment. You will note that we have some form of stability in the polity as we speak. There are no concerns about future interest rate volatility. And of course, Nigeria is still remaining as one. Our credit rating is not significantly lower than investors can take position in. So the major concern for them seem to be the exchange rate. While there are other concerns, there are no major risk that will crystallize in the medium to long term, as we can see for now, than the exchange rate risk. And that is why foreign investors have continued to place a lot of emphasis on issues around the exchange rate. And from our angle here, because what the CBN has been trying to do is to contain demand. You rightly said that there has been some pressure. When these foreign investors want to come in, there needs to be enough dollar liquidity, for them to be able to come in. And then when they want to go out, there should be sufficient dollar provision for them to also exit the market. So the issues around exchange rates are very major. And if you agree with me, there may still be the need for some form of, devaluation, and which is what most foreign investors are still pricing into this market.
Okay, Robert, we thank you for your insights today. We appreciate that. We thank you for coming through. Do have a great day ahead of you.
You too.
We'll talk to you in the next couple of days. Robert Omotunde, an investment analyst at AfraInvest.